Hello and welcome to the CNBC-TV18's Mumbai newsroom. I'm Sonal Bhutra and with me is Ekta Batra. You're watching Your Stocks, a show where we discuss all the stock queries and get it answered by our experts as well. Well, Ekta, for the markets at the day's high and mid-caps, they continue to shine in house. So we are at the 19,700 mark, which we breached sharply yesterday. And it's all about pharma names today.
Yes, absolutely, Sonal. You know, we have Glenmark Pharma, which has moved to the high point of the day. That stock is up around 10-odd%. And from the entire Nifty space as well, we have good gains which are coming in from the frontline pharmaceutical stocks such as Dr. Reddy's, which is at the high point of the day, Divi's Labs, which is up around 3-odd%. And it's not just pharmaceuticals, it is healthcare such as Apollo Hospitals, which is gaining in today's trading session. But it's not only pharmaceuticals, because we also have stocks such as Hindalco, NTPC, Tata Motors, UPL, stocks all from different sectors which are seeing momentum on the upside. So without any further ado, let's get to all of the queries that we have lined up in the next 30-odd minutes. We have Astha Jain, who is the research analyst at HEM Securities, joining in to discuss the fundamentals. Ruchit Jain, who is here to discuss the technicals of the market. Astha as well as Ruchit, welcome to the show. But let's get to the first question that we have. We have Pratistha Kapoor, I hope I got that name right, who writes to us from the city of Mumbai. She holds 30 shares of M&M, which she's bought at around 800 rupees. So she's sitting on a profit there. She's making some gains and she wants to know what to do going forward, whether she should book her profits or stay invested. Well, Astha, what would you recommend?
Hi, good afternoon to both of you. So talking about M&M, I recommend hold this stock with a price target of around 1750 to 1770 odd levels at the initial juncture. So basically, if I talk about the M&M, the company has posted very strong numbers in the quarter gone by. They have a strong pipeline. In fact, new launches which they have done are really reaping well for the company, especially in the domestic market. They have launched OGAs tractors, and now they have a plan to launch it in the overseas markets also. So I think all these initiatives by the company will help the company showing strong future performance ahead also. On that basis, I recommend hold on the stock with a price target of somewhere at around 1750 to 1770 odd levels.
Okay, all right. So that's on M&M. The next query, let's get that one now. Hardeep Singh is writing to us from Amritsar. He holds 50 shares of ONGC at 60 rupees a share, is a medium-term investor and wants to know the future prospects of his investments. Well, he's making some profit, and with the tailwind coming in from oil prices, looks like there could be some upside from here on. But of course, we'll ask that from our technical analyst as well. Ruchit, tell us, he is talking about being a medium-term investor. What would you suggest at these levels?
Yeah, hi, very good afternoon to both of you. Well, I think the medium-term trend still remains positive for ONGC, although it's directly related to the crude oil price movement. But if you look at recent structure as well, this move has also been supported by higher volumes, and that yields have witnessed a good buying interest in the last 4 to 5 months. So as of now, there are no negative signs in the stock technically. 180 is now a good support base. So I would advise to continue to hold on to the positions with a stop loss below 180 and review the positions where the stock comes around 205 to 210.
Okay, all right. Well, Astha, what would your opinion be on ONGC? As you can see on your screen, it's been a complete rank outperformer. It's gained over 50% in just the past couple of months. What would you recommend on that fundamentally?
Maybe as it is directly correlated to the crude oil price, so we are seeing some sort of stock price momentum on the upside also. In fact, going ahead also, we are expecting this momentum to be continued, because what we have seen, first of all, the higher realizations will come on their financials going ahead, as the crude oil prices have jumped significantly in this quarter itself. So that will help the company in posting strong numbers going ahead. In fact, the production from the KG basin and all this, the new assets also will help the company in showing strong production going ahead. And we are expecting the production to grow at a CAGR of 4.6%. This is, I'm talking about only oil and gas production over the period of 2 years. So if that will be the case, then definitely we will see company performing better on the financial front. And in that way, we are positive on the stock with a hold recommendation at the current level. And the price target we are giving on the stock is at around 220 odd levels.
Okay, all right. So that's on ONGC. But let's get in another question now. We have Rahul, who writes to us from Chandigarh. He holds 20 shares of HDFC Bank, which he's bought at around 1,000 rupees. So he's sitting on a profit there. He's making gains. He wants to know what to do with whether or not he should remain invested or whether he should book his profits. Well, Ruchit, I'm going to toss this one to you first. Technically, do you see more upside on HDFC Bank, and what would you recommend above these levels of 1,500?
Well, looking at his buy price, I can assume that he's a mid to long-term investor and not a short-term trader. We have seen some underperformance in the near term in the stock, but overall, the longer-term trend still remains intact. I think this is more of a time-wise correction within a long-term uptrend. So I don't think that there would be much downside from current levels. So 1,500, 1,450 is a good support range for the stock, and the stock has already seen a correction from a higher levels and very close to that support range. So I would advise to continue to hold on to the stock. The mid to long-term trend still remains intact, and I think once this time-wise corrective phase is over, HDFC Bank would also participate and in fact take the leadership to take the bank nifty also higher in the next leg of up move. So continue to hold on the positions. Most of the price-wise correction I think has been done. Maybe some time-wise correction could be there in the near term.
Okay, all right. So, Astha, do you concur with Ruchit on the fundamental side? The entry price is 1,000 rupees. He is making decent profit as well. Do you think he should continue to hold it?
So what we believe that this bank will take another 1 or 2 quarters more in order to show, decent operating performance. And if here the horizon is a long term, or it is like till FY25 or 26. So till, until then we are expecting the bank to show some sort of a mediocre movement. Now, why I am saying this? Because first of all, what we are expecting with this merged entity, definitely a softer performance can be expected from the bank. But going ahead in the long term, we are expecting this bank over the period of the next 2 to 3 years to show margins in the range of 3.8%, that is net interest margin. And even what we are expecting the bank to show ROA and the ROE in the range of 2% ROA and the ROE of around 17%. But all these calculations which we have done is for the longer time period, that is over 2 years. This is what I'm saying. So here the time horizon matters. So if it is if the investor is really ready to wait for at least 1 year or so, then definitely a hold is recommended, and he have to be very patient, because I think the coming 1 or 2 quarters also the bank may not be able to perform strongly on the financial performance side. So here, if the time horizon is long, then definitely a hold is recommended. But at the initial level, if everything goes well with the stock, then 1,700 can be set as a price target.
Okay. All right, Astha, thank you for that. So the next query also is on the banking name SBI. Ronak Kapoor is writing to us from New Delhi, holds 80 shares of SBI at 200 rupees a share, and says that he still is making some profits, of course, but he wants to know whether he should buy some more banking stocks or let it go. So Astha, he's talking about a pick from the banking space, whether should stick to SBI or look at other names. What's your take?
So I think there is no need to, look other names, especially in the PSU banking space, apart from Bank of Baroda, on which we are really positive at present moment of the time. But even SBI is looking good. What happened in their last quarterly results is that most of their earnings was attributed mainly to the treasury gains. And somewhere the management, whatever they have guided for the NIM, miss was seen in the net interest margin also. But that is, I think, mainly a seasonality factor. So there, a moderation in the NIM as well as the asset quality is a seasonality factor, because in every first quarter of every financial year we have seen that. But going ahead, what we are expecting that their loan growth will remain decent. We are expecting 14% gross advances growth going ahead. So that looks decent. So I think if a loan growth is there, definitely the bank will be able to perform better on the financial front. And in fact, their margins will come back to normal. So all in all, we are recommending hold on this bank. And price target can be set at around 620 to 650. This is for the longer time horizon. I am recommending the price targets.
Okay, all right. So these are the longer term price targets coming in on State Bank of India. Let's get in another query. We have Mahesh, who writes to us from Bhopal. He holds 700 shares of Sona BLW Precision Forgings, which he's bought at 678. So he's sitting on a loss there. He wants to know what to do, whether he should hold or book his losses on this particular stock. Astha, would you have an opinion on Sona BLW and whether it is time to in fact exit?
I don't really think so, because the reason why I'm saying that, because they have a good order book, and in fact they have started with various new programs also. So if I talk about their order book, they are standing at somewhere at around 220 billion of order book. So when such type of order book is there, definitely it gives some sort of visibility in the financial performance in coming future. So I think rather than booking losses and exit, it's better to hold the stock, wait for some more time, maybe a quarter or so, and a hold is recommended for that reason only. So I recommend hold on the stock rather than booking losses at this juncture, because we are very much near to this quarterly results also for the quarter 3. So I think definitely something positive can be expected out of this quarter going ahead.
Okay, all right. So let's see whether that comes through or not. As of now, Sona BLW, its 52-week high also stood at around 625 odd rupees. So it's a little bit away from those levels as well. Let's see. It's nonetheless given good returns of around 26% on a 12-month basis. We'll take a quick break, but we'll answer more stock queries on the other side. Stay tuned. Welcome back. You're still tuned into Your Stocks on CNBC-TV18. We still have with us Astha Jain, who's joining in on the fundamentals this afternoon. Ruchit Jain, who's joining in on the technicals. Well, we do have a very lively market on our hands as well. We have the mid-cap index, which is up over 500 odd points. We have a lot of queries which are coming in terms of specific stocks. So let's tackle a couple of more. We have Rakesh Bhatnagar, who writes to us from Ghaziabad, Uttar Pradesh. He holds 500 shares of Lemon Tree, which he's bought at around 110 odd rupees. He's a short-term investor and he wants to know what to do, whether he should hold or sell at these current levels. Well, Ruchit, technically, what would you recommend on that stock? And then I want Astha's opinion as well, because a lot of these hotel stocks are going to be in focus ahead of, say, the World Cup as well as the festive season. But before we get to you, Astha, just a quick technical check from Ruchit on this.
So I think overall the trend for most of the hotel names still remains positive. We have seen that the recent up moves have been supported by very good volumes. But the corrections which are there, we are not witnessing any high volume sell-off in the correction. So this note structure is quite good, that price up move with good volumes and corrections with low volumes. So I would advise him to continue to hold on. Over a short to medium term perspective, you can expect levels somewhere around 135 on Lemon Tree hotels, and 105 to 108 is a good support range for the stock. So we are positive on the entire sector as a whole. Even Indian hotels, I think, can show good outperformance over the next 2 to 3 months. So continue to hold on the positions for potential targets around 135.
Okay, and Astha?
Yes, even I recommend the same, and here the price target is 140. So 135 to 140 is what we are recommending as a price target. So for Lemon Tree Hotel, we all know like it is having a leadership position, especially in the mid-scale economy segment, with a 19% market share. In fact, we are very much optimistic about their new hotel, which they are, opening at around near the airport in the Mumbai. I'm talking about, that is Aurika, which has a 669 room. So that will be another key to watch, because I think that will really help the company in posting strong performance. And the way the company is right now showing its financial performance, definitely upcoming World Cup. In fact, in the past also, we had G20 summit along with the Miss India contest. So I think all these factors really help this total hospitality sector to post a strong financial performance, and in the future also they will continue with that. So all in all, yes, a hold is recommended for this stock with a price target of around 135 to 140.
Such exciting times, right? It's a long weekend, then we have the World Cup, then we have some festival season. Ekta, are you going to be contributing to any of these hotel revenues? Not the listed ones, but generally.
Well, there is a movie which has come out on the vaccine journey in India, and I think that would be an interesting one for me to watch. No, I'm just joking. I'm sure there will be a lot to watch out for. There are the warm-up games which are taking place for the World Cup, so that will definitely be something on our radar.
Okay, that is interesting. But of course, we have a market to track as well. So let's get going with the other queries. Srini Harini N is writing to us from New Delhi. Holds 200 shares of Century Enka at 600 rupees a share. Medium-term investor, and wants to know whether to hold or book his losses at current levels. Astha, tell us, because there are some other names which are available in the same space. Do you advise him to switch to the other names, or at least hold on so that he can come to the break-even levels for sure?
So what I advise is to book partial losses and exit, but partial, holding can be kept for the long term. So why I'm saying this? Because no doubt in the past they have not posted with this strong set of numbers. They are working in the two segment, basically nylon filament yarn segment along with the nylon tire cord fabric segment. So what happened? They are not getting good demand on the nylon filament yarn segment if I talk about, because we have seen overall at the international level also the Chinese dumping was there. The garment prices were not in the great demand, and Chinese dumping was there. So prices were also cheaper. So that has affected the volume of the company. In fact, in the other segment also, they have seen the same thing, that their volumes were impacted. But now going ahead, what is making positive about this company is that they have certain, investments in the capex also they have done, and we are expecting certain, plants to get commissioned over the period of a time, maybe by the Q4 of FY24. So from there, some hope is there, and that is why I'm recommending partially exit and partially to be stay invested. Although the price target is which we are setting is only 510, and the cost price is much higher than that. So it will take a lot of time, maybe 6 months or a year or so, to achieve those levels. But still, I recommend hold partially and book losses and exit from the partial quantity.
Okay, all right, Ruchit, as well as Astha, we're going to thank you on that note. It's always a pleasure listening to your views. Thanks very much for joining in, and wish you a good long weekend as well. Well, on that note, we need to wrap up on the show with the news that we have a very strong market on our hands. We have the mid-cap index, which is up over 500 odd points, Nifty, which is surged close to 200 odd points. So let's see what the next 1 hour holds. That's all the time that we have on the show. But do remember, as always, to email us your questions, and we will address them with our experts. Stay tuned.